Welcome back, guys. I've got a very special guest for you today. It's a long-awaited interview with Phil Anderson. But before I get into who Phil is, how and why I found Phil, and what he could do to help you with the knowledge and the wisdom that he's accumulated over the years. Basically, I've seen it as the holy grail to the investing game. So I found Phil's work a few years into taking real estate investing serious. I always wanted to know when to sell. Everyone in the game tells you when to buy, but I wanted to know when to sell, because obviously selling, we can take some profits at that point. And so I've been following Phil for over a decade. I found his cycle and it made a lot of sense to me. And the calls so far have been absolutely on point. People are fearful. Phil's been there to tell us it's not so bad. This is not a book tour of a new economist coming out, doing all that sort of jazz, telling you the world's crashing. I've been hassling Phil for a long time to do an interview. He's kindly agreed. So who is Phil before I bring him out? Australian economist, major in accounting, over 35 years in the investing game, author of the book that I bang on about all the time, Secret Life of Real Estate and Banking, world-leading authority on Gantt cycles and analysis, and co-founder of Property Sharemarket Economics, a world authority in property and stock market analysis for savvy investors. They're all my words because I've been following it for a very long time. So without further ado, here is Mr. Phil Anderson himself. I'll let him say hello.
Yeah, hi Jason, how you doing?
Awesome. Excellent.
Good.
Thanks, Phil.
Good.
He is very excited to be here to join us as well.
Yeah.
All the way from, are you in Jakarta?
I'm in Jakarta at the moment, yeah, nice and warm here. The city's great, the people are great, the country's great. Although, I travel a bit, but I've just found Jakarta seems to be the place that resonates with me most.
Because you have a few homes.
I do, yes. Yeah, France, UK, one in Melbourne.
France and Melbourne.
Okay.
All right, well, yeah.
Yeah, okay. It's really odd, in Jakarta here, Jakarta is on the Java Sea, as you know. The Java Sea rises and falls in 18.6 year segments, 9.3 years up to its highest tide. This is 9.3 years down, lower. Remarkable, really. That's why I came to Jakarta in the first place, to study this phenomenon. Because it was.
Is that real?
Yes.
Is that true?
Yes, absolutely. It does. And if you type 18.6 into the NASA website, it'll come up with the regular tidal effects, which is done by the long cycle of the moon as the moon and the Earth turn around the sun. I won't go into that.
All right. We won't get too far into the astrology stuff because people.
No, planetary, not astrology.
Planetary. I've heard many times before astrology is TA for men.
No, there's nothing esoteric. It's the way the sun and the Earth move around the sun, and
nothing esoteric.
The tides move accordingly. But we shouldn't start. That's getting away.
We're getting too ahead of ourselves. We need to know if the world's going to come to an end this year, if the 18.6 year cycle actually works, how can it not correct itself, how can we use it to make the most money we possibly can. There's a lot of questions from all of the members. And before I get too far ahead, Phil, I'll mention links to all your stuff are in the description. I bang on about your book all the time. Links are there. Yes. Twitter, the website, Property Sharemarket Economics. We'll talk more about that throughout the video, but let's crack on first with what is the cycle and how does it work for everyone who has just heard about it now?
Yes. Well, I was sitting with my family in 1990 odd in Melbourne, and we were approached by. We ran a profitable business that tended to do well in downturns.
And what was that business? I know what it is, but it's interesting.
Embroidery and ladies' lingerie. But for some reason, women buy more lingerie and lipstick in a downturn, which helps our business. Not to be flippant about that. Embroidery is one way to make a garment look more expensive than it is, and you can add that to lingerie and other sorts of women's clothes. and it seems to do well in a downturn because you can make something look better for a lower price. So again, it's nothing.
Value add.
Yes, yeah. So we tend to do well in a downturn. Sometimes we knew a little bit in advance if things were getting tight because women were or are reducing their spending. So in the 1991 downturn, it was really serious. For those, you've sort of got to be over about 50 something now, I guess, to remember it. But the downturn of the very early 1990s was quite severe around the world, but more so in Australia. And it was worst in Melbourne. Unemployment went above 12%. In fact, it was probably closer to 15%, which is an economist's definition actually of a depression. But the government back then, the Labor government, did everything possible to keep people off the unemployment queues by trying to retrain them. So we were approached, because we had a profitable business, and all the banks, Westpac, NAB and others, they went through their portfolios to see who could continue to pay their loans. There was nothing nice from the banks. The banks were in trouble. So they foreclosed any loan that couldn't pay. They called them in, which put people into dire straits sometimes if you couldn't maintain your payment. So we had a decision to make because we were offered some real estate, which I won't go into because it's more personal than anything else, but it was sizable. We're talking 20 odd commercial buildings. Reasonable.
You were offered this to purchase?
Well, yeah, to keep the loans sustainable. It's the only way the banks kept themselves afloat. Okay, that's all I'm going to say. So I was reading at that time Fred Harrison's book called The Power in the Land. That book by Fred was published in 1983, and it forecast that the world would go into severe recession after the peak in 1989. And here I was reading the book in 1990. Astounding, actually. It was forecast. It was a tip-top forecast. It was bang on for the year, and I thought, there's got to be something in this. So,
but he wasn't calling a depression every year before that, like we see with a lot of other economists.
That's correct. In 1983, when he published the book, he said that the UK and the world economy would absolutely boom into 1989 when it would peak. So it was a call of 7 years in advance. This is obligatory reading for anybody that wants to understand the cycles. It's a little heavy, but nevertheless, that was the first book of its kind, really. I needed to research that because the family made a decision subsequently to purchase all the real estate. That since then that real estate's now gone up. It's up 1,000%.
Wow.
It's you can't even value it these days. It's anyway, I won't go into it. Right, so we've done.
There's a lot of real estate worth a lot of money.
Yes, yeah. So I won't go into it anymore. So I thought then that I thought I'd probably have a part-time business I could run, telling people about the cycle because I'm an economist and stuff. So and I did want to run my own business eventually. So
how did you find that book at first? So people are wondering, how did you first learn about it, and then what is the 18.6 year? So why were you reading Fred Harrison's book at that point?
Oh gosh, I travelled around the world in 1985 and 1986. I backpacked around the world for about 20 months, right around the world. Started off in Europe, went from Europe. This is before the wall came down, so we're talking in Eastern Europe, the old communist countries. Then I went into Russia. I caught the Trans-Siberian from Russia into China. Then from China went through into the Himalayas. We walked around Mount Everest into India. So we were at a height of about I don't know, it's about 6.5, almost 1,000.
I think people are probably thinking, why did Jason ask that question?
Yeah, well, I went around the world because I decided. When I was at school at university studying economics, nobody could tell me why things were like they were. I was studying what was called the Phillips curve, which said that you could only have unemployment high or inflation high, but not both. And in the 1970s, unemployment was high and inflation was high. Absolutely nobody could explain it. And when I got back from all my travels, I ran into a study group about Henry George and David Ricardo. And one of the guys there said, if you're interested in forecasting, you should read this book from Fred Harrison. I did, and the rest is history then. So I decided after that to start my own business that I would research the United States, because Fred had done the UK. And I thought, if this truly is a cycle, then since the US is now the world's major economy, if the UK can do this sort of cycle, then the US has to as well. If I found the research in the US, then I'd be off to running a business and selling the research into the US, because that's where the money is. And lo and behold, I discovered that the US has a very regular land speculation peak every 18 years. And it's been practically month perfect since 1955, Second World War. How good is that? So I was ready for, after all of our property stuff in 1991, once I got into the cycle, 1995, 96, it was clear, if the history was going to repeat, that US real estate would peak in 2006, the stock market would peak in 2007, then we'd have an almighty crash. Jason, I was ready for that crash. I knew that was coming, I can't stand up publicly and say that, because people think you're just another idiot giving another forecast, which is a dime a dozen these days, right? But we have to be humble about these things, because I walked into the Westpac branch in Lygon Street, Melbourne in 2007. The bank manager there was happened to be a woman at that time, and I sat down and we had a discussion. I said, markets are going to crash in 2008, 2009. Please make sure all my funds are ready so that I can do some buying, right? So you have to be humble, because it worked out that way for practically the rest of the world. But in 2009, the only market in the world that went up was in Melbourne. I think it was all the Perth people buying up, because they were still having an outrageous time with China buying up commodities. So
for people who weren't following, that was WA had a mining boom, and so their property was crazy for that whole period. It was one of the only places that didn't go down. That's correct. Yeah, parts in Canada as well were the same. So you have to be humble about these things. That markets have a habit of never quite working out exactly how you think, but nevertheless, this 18.6 year cycle, if you can see the stuff behind it, which we should get into next, it's an incredibly useful, valuable way of. It gives you it tells you the structure of the economy, and it's a very handy, valuable way of working out how the economy actually works, and then sort of having a decent idea what might come next, And so we got into 2011, 2012, and 2013, when you might recall that absolutely everybody was still suggesting that things were going to crash. The US dollar had it, and the euro was going to collapse. The European Union would disintegrate, and here I was telling everybody, no, we're at the bottom. Real estate has had its low. If history is to repeat, it's been from about 2011, 2012. Now we're talking real estate here, not stock markets. After 2011, 2012, if history was to repeat, then US land value would continue going up for the next 14 years. And then we get 2019, 2020, then we have the pandemic, and absolutely everybody in 2020, every economist anywhere, come out and said that absolutely everything's going to collapse, property's going to collapse. You were there, you saw that, right? And here I even saw the Tony Robbins, all the biggest guys worth billions talking about it, 30, 40, 50% collapses.
Yes, exactly right.
They all went quiet.
Yes, these guys don't understand the structure of the economy. And the structure of the economy is based on what's called economic rent. Economic rent is just basically the earnings of land. Absolutely everything in life is based on earnings. Now, and let me give you just a brief example of what I mean by that. Everybody at some point, you have to know what you're worth. Yes, and if you run a business, particularly, I don't know, say you run a hairdressing business, or you run your own accounting practice, what are you worth in monetary terms? What's your business worth, or what is it if you're in your own company? What are you worth for somebody else to buy you? And the way economics and accounting and markets do that is based on yearly earnings. And then you have to decide upon what price you're prepared to pay to buy those earnings. Yes, and so land has an earnings rate as well. Generally, it's about 5% a year. And so if you were to lease out your land in the middle of the city, to work out what you've got to buy that piece of land for, roughly the price historically is about 20 times earnings, roughly. Now, over time, some years, people are prepared to pay more for those earnings than other years. And depending on how generous a bank can be, they might lend you money these days for the purchase price, which if the bank's in a happy mood, it'll lend you more money, which of course, as we know, if everybody can borrow so much money, that tends to put the price up. So you have to pay more for the same amount of earnings. Yes. Now that when those earnings capitalise, when we start paying a price for the earnings of land, you must get a real estate cycle. And when you understand that, and when you can see history, and the history I show in my book, it becomes.
There's a lot of it in there.
Yeah, there is. The history's in there.
200 plus years of it.
Yes, and I demonstrate then some of the statistics and then all the indicators you can use to help you forecast where you are in the cycle and how the cycle is going to work. It then, once you understand that from an earnings perspective, it isn't very hard then to start understanding how the economy actually works, and then to actually start to forecast what's going to happen next. I mean, it can, if you get that, it can bring you a remarkable peace of mind, because you don't have to then start listening and be affected and have your emotions going up and down by what everybody else has got to say.
I can hear the questions starting now, like putting the cycle first and not worrying about the interest rates and the Fed. It's like all the sort of latest news at the moment. The Fed's going to raise interest rates, and that's going to affect property, and property has to crash because the interest rates are going up, et cetera, et cetera, et cetera. I think it's a good point for people who are still new to the cycle to understand what you're talking about when it comes to the economic rent, and that affects the 18.6-year cycle, and then look at it from the perspective of the broader picture rather than the day-to-day Fed said this, Fed said that noise.
Absolutely. The Fed, the President, the United States, the governments around the world, they are endogenous to the system. Now, endogenous means they're all within the system. Anything within the system isn't the catalyst, doesn't cause things to move very much, right?
Big point. Yep.
Yeah. So, the Fed these days, particularly since the Second World War, I think people can see this now, it's been demonstrated. The Fed doesn't want things to collapse, so they do everything possible to ensure that it doesn't. Now, clearly, if the Fed president decided today that he was going to lift interest rates 10% overnight, that would be catastrophic. But it's not going to happen, because the Fed is there to preserve the system, and so they'll do everything to preserve the system. Once you know the cycle, and once you can see the history, you understand that the cycle is related to earnings. You understand that you understand the law of economic rent, which means that all of the social progress that happens, all the benefits of society, in the finish, capitalise into the rent. Then land price just keeps going up and up and up and up. History shows that after 14 years going up, if the banks get really greedy and start creating too much credit and lending too much money, history shows it's a 14-year process. Land price will eventually go too high for the productive part of the economy, that's business and the workers, to afford it. And that's when you start getting things really difficult, and usually after that there's a crash.
And I can hear the questions. So what is the 18.6-year cycle? 14 years up, 4 years down, roughly speaking. That's the average, and we've seen them as short as 17 years and as long as 23 years from
21 in the US.
21.
But since the Second World War, they've been remarkably consistent. And
what happened before the Second World War? Why weren't they consistent?
Because.
And can that happen again?
No.
That's what people are looking for now because of the wars. But I've got more of those questions coming up as well.
No, there are plenty of questions. Yeah. In the 18th and 19th centuries, government had the economists had a belief that governments had to balance their budgets. And so when things turned down, governments and the banks, their behaviour generally made things worse. The banks would call in all the loans, and the government would attempt to balance its budget by not spending anything more. And so that would be a double whammy, sometimes a triple whammy, which would actually tend to make the downturn worse and would last the usual 4 years. Since the 1930s, when John Maynard Keynes came along and said the government can be more proactive in the economy, since the Second World War, governments have been spending a lot more money, spending more into the economy, which the banks by issuing bonds, which the banks then lend the money to the government, and the government spends that into the economy. This is.
So you're saying that's a good thing, creating money?
No. That's another topic.
We've got a lot to get through. We're only in the intro so far.
Governments are more proactive these days, and when things do start to turn down, they've worked out that governments can spend money into the economy when things do turn down. So it has so far ameliorated the extent of what the downturn should be. Stock markets pick up on this pretty quick and are fairly quick these days to have a very
recovery,
quick tumble, but then a very quick move out as well.
Yeah, we saw that in 2020. That was just straight down and straight back up. So how's that going to affect the cycle then? Won't that affect the cycle?
2020 was mid-cycle, so let's not confuse our end of cycle extreme with the mid-cycle.
So the end of cycle can still be that 4-year period from the peak to when?
For real estate, yes, but stock markets recover quicker now. Okay.
More liquid than real estate, which is why it's quicker in the stock market.
Yes, markets are a lot bigger these too.
So that leads me on to what are some misunderstandings about the cycle you've heard over the years? That's a misunderstanding that I've had myself. Stock market, property market, what are we talking about? The stock market always recovers, but the property market might peak earlier or later. Exact dates for the cycle are some things I hear, and can we time this sort of thing?
Let me suggest this. The cycle we're talking about, 18.6, it applies to real estate. Okay, it is not something for the stock market. One of my specialties over the years is that I do both. I've been a specialist studying real estate, but my passion is actually stock market. Over the years, generally, I've found that people are one or the other. They're usually interested in the stock market. If they do all the stock market, they don't do property so much, except buying their own house perhaps, or one house investment. If you're into real estate, generally real estate investors don't study the stock market. You seem to gravitate to what your emotions are best at, really. And a lot of real estate investors, they don't like the stock market the way it goes up and down so quickly, right? It's very hard to deal with emotionally. Whereas, your real estate's much easier to look after, really, in a way. So,
except for tenants, but
well, yes, obviously, tenants, create can be your biggest problem.
I won't distract us from the point here.
Yes. What I've been able to do, what I always tell my members and subscribers is that if you're a real estate person, you should at least attempt to understand what the stock market does and what it's about. If you're a stock market person, you should attempt to understand real estate. Let me tell you why. If you're a real estate person, you should understand the stock market, because at the bottom of real estate markets, when we get to lows, it's always the stock market that leads the real estate market. So you can actually use your knowledge of the stock market to help you as a real estate investor identify the low points before other people see it. That can be very good, can enable you to make some better buying points, because after all, the profit's in the buying, it's not really in the selling. If you're in the stock market, I ask stock market people to understand real estate, because at the end of the day, what drives the cycle overall is the enclosure of the economic rent, or in other words, the capitalization of the land earnings into a price. And at least I don't have I don't have official figures, but I reckon probably anywhere between 30% to 50% of all stock markets are basically rent. That is financial stocks, real estate stocks, banks, and other things that are effectively just lending against economic rent, land value. People see it as house value these days, but it's just really rent. So depending on which investor you are, you should really understand the other side of things, and that's what I try to get people to do. And so at the extremes, which is what we're interested in overall, when property bottomed in the US through 2009, 10, 11, the stock market was already up. By 2012, by 2013, the US stock market was already making new highs. That was telling you that the cycle was well underway, and it was telling you that US real estate would recover over the next 4 to 5 years. Yes, that's very handy information to know. It means
why don't more people see this?
Yeah, huh?
Why don't more people see this? It seems simple, talking about it like this.
Yeah, it's a good question. More people don't see this because, and I appreciate you asking that question, actually. It gives me a chance to explain it. More people don't understand this because the economics profession has been quite deliberately corrupted. Actually, the Shepherd Waldman publishers who I've dealt with over the years quite extensively, they're the people that published my book. They have a book coming out, an ebook of an old book, actually. Ebook's coming out next month. It's called The Corruption of Economics. In that book, Mason Gaffney demonstrates the 4 or 5 economists that were employed by the very wealthy men back in about late 1890s, the early 1900s, to deliberately write out of economics Ricardo's law of rent. It was totally deliberate. Mason Gaffney has completely demonstrated this in that book. It's well.
So it's not tinfoil hats, conspiracy theorist stuff.
No. It's just the rich, the people who own most of the planet. They don't want you to understand how easy it is to claim the rent and to buy it up. But they don't want the competition. All the people sitting, the lords, the Duke of Westminster and all the others, bless them. They don't want land as such. They don't want this highly visible, because if it was made highly visible, then somebody would come along and suggest, well, why don't we tax it? Because then government could raise revenue. In fact, government could put itself out of business by taxing the rent as revenue, create a citizen's dividend, and we'd all be far wealthier than we are. Yes. So the idea
that's another topic for a whole conversation. But I know you've got an ebook on that. It's a free ebook. I'll leave a link to that in the description as well.
Yeah. Corruption of Economics. Yeah, it's not published yet, but
no, the citizens' dividends ebook.
Yeah, citizens' dividend. Yes, okay. If you really want to understand what it's all about the earnings and about what its significance of what it means, my citizens' dividend book is a really good one to read. See, well, I just say this, there is a vested interest that doesn't want the economics profession to understand economic rent. And it's just, I'll just explain it simply this way, to say that economic rent is to economics what gravity is to science. And if gravity had a vested interest, in other words, if you could make money from gravity, or if you could make money from enclosing the sun, that gravity would not have been invented yet. Okay, so it's just simple as that. Because it's just a vested interest. There's no conspiracy in it. It's just that it's just the way the world works, right? So that's great for me, because I can stand up and explain the 18.6 year cycle and everything else. And I absolutely know I'm not going to get a lot of competition from other people trying to explain what the 18.6 year cycle is, because once you start explaining it, it leads to the obvious conclusion that we should be taxing land for a better system. And who's going to come out and say that, Jason? Who's going to come out?
Politics, definitely not.
No, because the land tax is the most hated tax in the universe for obvious reasons, because you can't shift the land. You can't take it with you to another country, right?
It makes complete sense to me now that I've read it so many times, but for someone new, it's kind of like not more taxes, or some people really love taxes and they want all people. And I always just say, you shouldn't be taxing productivity. It's like, you shouldn't be taxing the people, tax the land, which is what I've got from you as well.
Yes, that's correct. Well, I don't go out and advocate all of this. I just try to.
I'll do it on your behalf.
Yeah, I just try to show people, if you understand what economic rent is, you will then understand the structure of the economy. You will then be able to reasonably accurately forecast what's going to happen next, and make money without too much emotion, and do well. And that's great. A lot of my subscribers, as you know, done very well out of this. I get emails all the time, every day, from people saying how well they've done and how thankful they are that they've come across this. My number one feedback is, Phil, why didn't I see this 10 years ago? That's my number one feedback.
I reckon Harry Dent should read your book again. I know he's written the piece on the back here, but he's still out there. Anderson's book, 18-Year Cycle in Real Estate Throughout the Last 2 Centuries, is simply the best book on long-term real estate trends we've ever seen. Why the hell is Harry still saying the world's going to collapse? I don't know.
Oh, there's more money. You get more followers.
There's more money. More money in negative news.
Yes.
I think
but
that's...
So don't go down that rabbit hole. Okay, the world's the world's a wonderful place overall. I know there's trouble in various places.
Russia, Ukraine, that's the big thing that was happening right this minute.
Government's just making things far worse. It's in Mr. Putin's interest to create a disturbance, because his tenure is becoming tenuous because more people don't like him in Russia. It's in the interests of American government, because they want disturbances, because their military, they can pay more for their military. They can put more troops in Europe now, which Trump was taking them out. It's in just don't get me started on.
All right.
Don't get me started.
Well, we'll go. I've got political questions later on, but I want to have a look at some member questions. So my members, I've been talking about it for ages. Guys on YouTube, viewers, the first one I have here, because it's kind of the main thing that people ask first up. They're all from different places around the world. Will it be different in Australia, the US, UK? Which countries doesn't the cycle apply to?
Yeah, that's a fair question. I study the American land market, America as a whole. Now, America is 50 different states. So let me put it this way. Just simply understand the cycle. America is the largest country on earth. It affects everything else. Its bond market is even bigger than the stock markets. Its banks and everything else, they're the largest in the world. You have to know the real estate cycle comes out of the US. What that does, it allows you to then understand the structure of the economy. And after all, the US leads. So just work out what's happening in the US. Now, the cycle will apply to any country that encloses its real estate and where banks are permitted to create a mortgage based on the land and house price. So Australia will see a cycle. The UK will see a cycle. China will see a cycle now because it's enclosed its real estate. So any country that does that will see a cycle. But China's banks are not really part of the Western system yet. So they're still a little bit independent. Australia has so few people and such a big land mass that I would suggest, really, in one sense, the Australian speculation would just keep going ad infinitum if the US wasn't there. But because the US is the biggest market, whatever happens in the US, Australia is going to follow. So if the US has a significant downturn, Australia is likely to feel that, because we're a big trading partner with the US and we're all affected. And if the Americans and the banks stop lending there, then the banks in Australia get nervous and they'll do the same. America leads the cycle. That's why you have to look at it first. Generally, historically, since about the 1930s, my research, and I showed it in the book, Australia tends to follow what the US does, about 12 months behind. That's why it's worth understanding the US cycle first, because once you see what's happening in the US, Australia will tend to follow. So if you understand the US, it gives you a bit of a warning signal about what might come next. Australia is not going to see a significant downturn unless the US turns first. It's as simple as that. So Australia's got nothing to worry about whilst America continues to boom. History shows, and I showed this in my book, history shows that US has a very regular 18 to 20 year cycle. It comes out at 18.6 for various reasons, which we might get into later. And so you can basically time that. I've been saying very clearly since a long time now, decades, that after 2008 downturn, we'd get 14 years of rising property prices. It bottomed in 2011, 2012. 14 years takes you to 2026. This is not hard to work out. And so far, since 2012, the past 8 or 9 years, as you know, if I may say so humbly, I have been bang on. Yes, it's quite,
bang on.
All the stuff's there on my website. You can see that for yourself. And so I don't see any reason why the cycle won't continue to turn. It's behaving like it should at the moment.
I've got a few questions on like how the cycle can break, why it would break, all that sort of stuff. These ones are mostly about, will it be different in Australia, US, UK, New Zealand? I've got viewers in Europe. What about some countries?
It won't be different. It won't be different. What? It won't be different. The US leads the cycle.
Timing?
US timing. And US is going up. History says property prices in the US will go up 14 years. They bottomed 2011, 2012. That'll take you to 2026. The only thing that could disturb that, there's two things that can disturb that. Number one, the American government introduces a land tax. And since we've had President Trump in the White House the prior 4 years, I don't think he's likely to introduce that sort of phenomenon. Mm-hmm. So that's out of the question. The other thing that does upset it is a world war. The First World War into 1914, that stymied, that meant that we didn't really get a big peak into that particular cycle from about 1910, 1914. Everybody went off to war. The Second World War affected the cycle in the sense that nobody could speculate in the 1940s, so you couldn't have a big boom into the 1950s when the top was due. Could we get another war? Any time, obviously. I don't have a crystal ball on that. Things look a bit grim at the moment. But
it's got to be a world war. It's not like a China versus Russia versus Ukraine or something.
No. If anything, if we get a conflict there, if anything, I think that would add to what this real estate cycle could do. I think it would make the real estate cycle bigger, if anything, because the US will massively ramp up their military side of things. They'll produce more weaponry. They'll have to replace what they destroy. They'll print more money to pay for it all. Odds on then you'd probably get a lift in inflation. If you get a lift in inflation, then asset owners and people who've got money, if inflation's higher than the interest rate, which it is and which is likely to stay that way for a while, then you can borrow at 2% or 1% or 3%. Your asset goes up at 5 or 6%. That's a no-brainer, isn't it? You have to borrow money that way, right? So because your asset's going up more than the cost of your loan. I mean,
So that's part of the next question, asking how does the cycle keep working? Credit creation, economic rent, but mostly credit creation.
Well, the enclosure of the rent creates the cycle, but what actually determines how high the cycle will go is how much credit gets created by the banks. And as it's been detailed before, hard to believe.
The question as well, like the banks are creating a ton of credit now. I always get that come up. I'm like, yeah, but it's nothing like 2005, 6, 7. I remember it was just 107% loans, like all this sort of crazy stuff.
25%. It was absolutely totally full on.
125%.
Yeah, you could go to was it the Newcastle?
Do you think that'll happen again?
Yes, but not in the same form. As the cycle heats up, as land price goes higher, it means banks can create even more credit. They love that when that happens, and we are due a land boom if it hasn't started already. So the banks will create even more credit.
So even more than what they have now. So to I guess answer the question of, well, there's a ton of credit being created now. Why aren't we seeing, the top of the market? Couldn't this be the top of the market?
Hello, it's Cathy Stacey here from Property Sharemarket Economics. I trust you've enjoyed watching part 1 of A Recession Isn't Possible in 2022 with Phil Anderson and Jason Pizzino. Now, before we go to part 2 of this full interview, there's a few books that were mentioned. Now, one of them was The Secret Life of Real Estate and Banking by Phil Anderson, Power in the Land by Fred Harrison, Corruption of Economics by Mason Gaffney and Fred Harrison, and finally, the Citizen Dividend ebook by Phil Anderson. Now, you'll find the links to either download for free or to purchase those books in the description below. Now, you'll also find in the description below an invitation for you to join our weekly free newsletter. We promise you that you will receive every week a newsletter where we commentate on what's occurring globally, and we relate that back to the 18.6-year boom-bust cycle. Please do go to the link in the description box and join our free list now. And lastly, if you click here, you can watch part 2 of this series of video. And if you click here, you can watch other videos from the Property Share Market Economics team.